Good evening, ladies and gentlemen. Trust we have had a very great and lively day. My name is Oluyemi Adeosun. I remain your host. Welcome to yet another exciting and transforming edition of Learning Series with the HR Mentorship HR community. We are excited to have you. Do us a favor quickly reach out to your colleagues, your friends, other HR associates who should by all means be on this call. All right, let us get everyone to join so that from the very beginning, from the onset, they can get full insights into what we are talking about today. Today, we have chosen a very exciting topic and also very timely topic. Today, we'll be talking about finance for HR. We'll be discussing about how HR people could get better appreciation of accounts, of finance, and how we could develop competencies in that area to further make us more relevant, more strategic to the business. Without much ado, I would like to introduce our speaker for today. Oluwatobi Olubiyi is someone I have known for many years, maybe about 10 years now. And before I read out briefly his profile, I'd like to say that he is someone that is a man of integrity and is someone that is completely trustworthy. He's a great man. I'd like to use this opportunity to thank him most sincerely, most profoundly for what he has done. Let me mention just one example. One day I was coming from Ibadan and my car tires, I lost 2 tires at around Ibafor Mowe axis at 10:45 or thereabout. And I didn't know who to call. I just reached out to him. Guess what? In like 40 minutes, at that time of the night, he and his wife drove all the way from Ikorodu to come and meet me at Mowe. Picked up my tire, tried to fix it for me, looked for a vulcanizer, and then drove me along with me to Lagos because I now still didn't have an extra. And they followed me because they said, what if the tire, another tire goes flat? This is the kind of person Tobi Olubiyi is. Yes, I will read his profile, but I'd like you to know his character, his persona. He is indeed a great man, and it's my privilege and honor to reach out to him. We don't talk as often as we used to talk, but anytime we call each other or we reach out to each other, no matter what we create at that time, it's not convenient, but he decided to grace us and honor us with his presence today. Now, Oluwatobi Olubiyi is an associate chartered accountant. Currently, is the CFO, Chief Financial Officer at Atlas Supermarket and Stores Limited. Prior to now, he was the head of finance at Foodco Nigeria Limited. If anybody grew up in Ibadan, you will know what Foodco is, even though today Foodco is now a national brand. Prior to working with Foodco, he was the Chief Financial Officer, at Obmart Superstores. Of course, before now, Oluwatobi worked for 2 years at Jumia Nigeria, held different responsibilities and portfolios. As at the time he was exiting Jumia, he was the head of finance. All right. He also worked with eMotion advertising and many more. So he's someone who has experience that cuts across industries and cuts across organizations. And I'm sure, positive, that he has had encounter sitting at the management team, interfacing with the board, having an encounter, strategic level, operational level with HR. And he is willing to share with us as a colleague, as a brother, as someone who wishes we, the HR people, well today. Without further ado, I would like to hand over to Tobi Olubiyi. You may please share your slide and take over the presentation. Once again, thank you for accepting our invite. Good evening, sir. I can't hear you, sir. I can't hear you yet. I'll let you know if I can hear you. If you are using
Okay,
earpiece,
can you hear me clearly now?
now we can hear you.
How is the volume now?
Yes, better. Great, excellent.
All right. Yeah, good evening, everyone. It's a pleasure to be with us this evening. I sincerely hope that the next 60 minutes to 90 minutes will be a very fruitful one. It will be a learning session. It will be an interactive session, and it will be a value addition session. I must say that I never remembered the story you shared, some minutes ago. I mean, it's just interesting how life can be. But thanks for reaching out that night. All right, so folks, Mr. Adeosun had tried to make some introduction about me. I'm Oluwatobi Olubi one more time. In the course of my career, I've been able to interact with a number of units, for which human resources, it's one of the major units I've interacted with in time past. I sincerely hope that sharing with us some finance basics and sharing with us some business languages tonight would give us some insightful deliberation, and it will help us manage our various stakeholders in our various offices in better way after this session. So quickly, yeah, I believe you can all see my screen, right?
Yes, but it is not full screen. You may want to stop sharing and reshare again.
Okay, it should be now. So, do you have a full screen now?
Not yet. I will suggest you stop sharing altogether and then start sharing.
Okay, I stopped sharing first. Okay.
Yes. We are still seeing your slide. Okay, now you stop sharing, sir.
Can you see my screen now?
Yes, but
Okay.
not full screen yet.
Do we have it as full screen now? Not yet.
Not yet.
Yeah, please do let me know once we have a full screen.
Not yet. We can still see slide 1, 2, 3, 4, 5, 6 at the side. Maybe we just run it that way in the interest of time. It's still showing like that. Except you want to stop sharing again.
Do we have it as a full screen now?
Not yet.
Still no.
Let's try it one more time. If it doesn't work, we'll run it like that.
I didn't get you clearly.
I said, maybe you stop sharing and reshare again. If it doesn't work, we'll work with it like that in the interest of our revenue.
Okay. Or would you want to share from your hand?
No, it won't be convenient. We have about 40 people on the call. Thank you everyone for joining. Good evening and welcome.
Okay.
More people will join as we progress. So let's try again, sir.
Yeah, sorry for the time. Yes, can you see my screen now?
Yes, but not yet
Yes.
full screen.
So let's see for the full screen. Yes, do you have the full screen now? I expect you should have that now.
No, but
Okay.
proceed all the same. Proceed irrespective. Thank you, sir. Kindly proceed with your presentation. Hello, Mr. Toby.
Yes.
Please
Can you
proceed
hear
with
me?
the presentation. Thank you.
Okay. And it's still not the full screen now.
Yes, but don't bother. Just continue, sir. Don't bother
Okay.
anymore.
So let's move on. Sorry about that. Everything that should make it, I've done that yet. So I'm wondering why we don't still have a full screen yet. Okay, so in our journey of about 90 minutes or more, the intent we have is to run through all this together. So we have the introduction, we have the core and supporting business functions. We'll talk around the wrong mindsets and perception of business performance. We'll talk about business metrics. We'll be talking about performance and expectation gaps. Finally, we have interactive session. So quickly, I'll go to the introduction and definition. I wrote here, I said, life is in chains, sequences, and phases. And I mentioned here that each of these chains is actually linked to one another. Despite the fact that each chain can, exist independently, but they have to just be mutually, function together. We in various units must understand the fact that we belong to a particular value chain, and we must identify where we actually belong. Where we do not identify this, it poses a lot of challenges to our performance, and then it affects our delivery in the end of day. I wrote it there. I said the basic truth about life that our actions and inactions will always have effect and consequences. And you will agree with me that life itself is full of transactions. So you can say our existence every day is actually business. I wrote it here that business encompasses economic and productive activities for the purpose of making gains. I tried as much as possible not to sound like an accountant, to sound more like a finance, a business partner person, and use as much layman definition that can help everyone to understand each of the financial terms we mentioned in our discussion tonight. So these gains are usually economic and social benefits. Then business organizations exist primarily to make profits and maximize profits. You will agree with me that all activities of business must translate into Naira and Kobo. And this Naira and Kobo is called the operating profits. Generally, it is expected that all players in the business space understand where they belong in the value chain, and they have clarity on the business language to achieve optimal business reports. Now, I want to divide the various functions in the business into two. And from two broad categories, we can see what business functions are. We can see business functions from either core business functions, then we can see the other part from the supporting business function. As HR business partners or as HR departments, it's fundamental to identify which of these two business functions we do belong to. And that helps us a lot to manage expectations and deliver those various responsibilities that would rest on our shoulder. For core business functions, these are operational and productive activities. The primary word I would like us to note there is that these activities are such that will generate revenue to the business organization. So such business units or departments are usually called the revenue generating department or the revenue generating units. The production team in a manufacturing firm is a revenue generating unit because they are converting the raw materials into finished goods, and this finished goods is what we are going to sell to final customers. The sales or the commercial team, the relationship team in a trading or service-oriented organization, they're examples of also the core business units, because these are the units that will generate more revenue. They are the ones going out there to turn all of the items we sell into into multiples of money. Then the second business function resides several other departments, and these are called the supporting business functions. These are usually referred to as cost centers because they are not primarily in generating revenue. They are seen as cost centers. Now, these business units, they are providing support to the core business function, and primarily it's just to help for efficiency and optimization of the profitability of the business. Most of the time, supporting business units are expected to help with cost minimization as they cannot generate revenue. And you know, to help your profitability, you are either coming from the revenue point or you are coming from the cost point. It's either you increase your revenue and your potential profit increases, or your revenue is stable, but you reduce your costs and you can increase your profitability. So it's expected from supporting business functions or departments that are supporting units to help to minimize costs of running the business. Minimizing the operational costs will also achieve a better profitability. So we wrote here that oftentimes the performance of supporting business units are measured by the cost-saving strategies that have been implemented by those units. I'm glad to let us know that human resources as a department, it's actually a business support unit. Just like finance, just like supply chain, logistics, customer engagement, vendor success, legal units, IT units, internal audits, all these various departments are all supporting units. And we provide supporting functions to the core business units. I think it's also fundamental for us to know that we need to have this clear cut of where HR professionals belong to, and this clear cut of where we belong to will help us a whole lot to maximize our relevance in the business space. In the context of today's global business perspective, HR professionals are expected to be business partners and not just employed HR personnel. You would hear some people say, I'm just HR, but those who have been able to step up the game, those who understand the current business language, know that no businessman wants you just like HR personnel. He wants you in as a partner. He wants you to take ownership of the business. He It wants you to run the business like the owner and deliver those things that will help for the sustenance and profitability of the business. So our understanding of the fact that we are expected to be business partners would go a long way to help us, achieve all the best of the potentials we are to give as our input to the business. As business partner, HR personnel are expected to proactively engage the business owners, engage the senior management and other stakeholders from a value and results-driven view. And the aim of all of these engagements is to help the organization achieve the key business objectives. Every key business objective of the business are converted into certain metrics, that are very relatable with all the units within the organization. And the HR business partners are expected to help drive the understanding of these business objectives, the conversion of these business objectives into individual department KPIs. It is never a thing in the current business world to expect HR to be Seyi Muyiwa. I wrote it there, I said, no, nobody wants a Seyi Muyiwa HR partner. Who is a Seyi Muyiwa? When you say, go and do this, bring down, go there, they are just like dummy. You just give them instruction to go here and there, do this, do that, and it's whatever you have asked them to do, that's what they do. Currently, business owners expect that HR professionals are also very relevant to the daily activities of the business. They participate in the business strategy sessions, and they are always there to help develop manpower and drive manpower towards achieving the business objectives. I think another wonderful thing I would like us to look at, to consider are certain mindsets, because it is being said that our mindset is the driver to our destiny. And where you have a wrong mindset, regardless of whatever it's the input or the effort that we put in, it's likely we are going to have a failure in the end, because mindset is very, very fundamental. It drives everything about every human being. So I thought it necessary that, we should look at certain mindsets. We have certain expressions we have also made, and these mindsets are possibly, most times they are actually wrong mindsets that we need to correct. And I believe in the course of our discussion tonight, we'll be able to see the better and positive mindsets we are all expected to employ, as HR business professionals. There's a particular saying, we are selling and we are meeting up with our revenue targets. So how can they say there is no money to increase staff salary? The first thing that comes to every staff mind, the first thing that comes to, sometimes even we HR professionals, we fall victim of this. We just assume and believe that if the target was about 10 million sales in the month, and we have sold 10 million in that month, or we have sold 15 million, the next thing we are expecting is that the business owners should reward us, and what they should reward with is increase in salary. Yes, we agree. There is inflation. Virtually the price of everything has gone up, but the same way it's affecting you, the same way it's affecting the business, and the impact is on all of us. So it would be a wrong approach as business partners for you to join the floor staff or the general employee to just take that perception that once we achieve or surpass revenue targets, then the next thing that we should expect is increase in salaries. Another one is, we have surpassed production targets. This is very common among factory workers. And you hear that, we have met up with our production targets. We're even able to do 120% of the production targets. So if the management really appreciates our efforts, the next thing they should do is to increase our salary. every time what the staff is thinking about is increase in salary, increase in salary, increase in salary. Even sometimes, or most times, they don't even look at programs, HR programs that can improve their skill sets. They don't look at programs that can improve their expertise and knowledge, which gives them better money, when they leave the organization and move into another organization. But all they look at is just increase my salary. Once you increase my salary, I know you have rewarded me. So if there's no increase in salary, that means there's no reward. I mean, these are part of some wrong mindsets we see around in the business space, in the office space. And a lot of HR professionals, are also victim of this. Staff say all sorts of things, and we give our consent, we nod our head, we agree with them without taking any step in educating them on how they should view the business activities and how they should view the business in rewarding us. Then another one, the senior management are the ones enjoying, I'm sure if I should ask us, how many of us have said this or how many of us have shared this in time past? A number of us may have been victim of this. Oh, it's only the senior management teams that are enjoying. The rest of us are just suffering. They are just using us anyhow. I mean, these are wrong mindsets. They are wrong perspective of how the business runs. You will agree with me that those in the senior management cadre, they have a lot of risk on them. And by virtue of their risk and responsibilities, they have rewards attached to that responsibility. Same way with the junior staff. I mean, the level of their risk and their responsibility is also the level of the reward they get. Everybody is important in the value chain. None is less. And these are mindsets we would expect HR to give staff when they make all these wrong assertions about business activities. You hear some even say our investors have just injected additional funds. And how come the management is not ready to increase our salary? Before funds were injected, there must have been some cash flow projections. What do I mean by cash flow projections? We must have done something like expected sales or expected revenue we are to achieve. We must have done something like operating expenses we are to spend money on. We must have done something like expansion projects, capital expenditure that we expect to spend money on. We must have discussed on maybe some investment opportunities that are available if operational funds are available for such investment opportunities. A lot of discussions have gone on the underground. A lot of justification for the fund must have been done. And it's after all this justification defense, that's when the investors are convinced and they will release the fund. So the primary reason for releasing those funds were never in the first place just to increase staff salaries. But it's a general assumption because staff are aware that new funds were injected. Maybe they have worked with some people in finance. They knew some funds just came in, and the next thing is that they've just gotten new funds, so they should just increase our salaries. Another part is, the business is making profits, yet they are complaining there's no fund to pay some operational expenses. In the course of our discussion, I'm going to share with us difference between operational profits and cash flow. A business can make profit and the business does not have money to even pay for some day-to-day obligations or day-to-day operational activities. You have vendors whom you are expected to pay. There are payment terms you have agreed with them. You have receivables, meaning the credit sales you have made, and you're expecting payments from those debtors. Once you have sold, it amounts to revenue, but it does not mean all your sales that you have in revenue translates into cash. Where you have credit sales, maybe 65% of your sales actually translated into cash in that current month, and about 35% will translate into cash in another 2 or 3 months. Not having clear understanding that, yes, we have sold. We've sold 100 naira, but the physical cash we have with us is just 65 naira and not 100 naira. Meaning that if there are operating expenses, if there are vendors to be paid, if there are payments here and there to be made, we still have to look at that in perspective of the fund that is available. And HR professionals are expected by business owners to have this clear understanding, and that also helps you in managing the stakeholders on when to introduce some HR programs, some implementation of some things we are planned for the year in terms of HR activities. But your non-understanding of this, or you not having any clue about the structure of our revenue, both the cash element and the credit sales element, you not having any clue about it can make you join others in ignorance, and you make different assertions. And in the long run, we are not aligning with the expectation of the business owners. Yes, I think it's fundamental. We now look at what are these business metrics, and then we have a talk through them. So the first year, I mentioned there that every ideal organization will always have clear, simple, relatable business metrics. Metrics are like yardstick, metrics are like milestones, metrics are like targets, goals, objectives. And we said these metrics, they will transform into the key business objectives or results. Or we can say these metrics will transform into the business key performance indicators. That's what we mean by KPI. Every core and supporting units would derive the KPI from the business metrics. So it's possible in a year, we just have 4 basic metrics, maybe revenue metrics, gross margin metrics. We have free cash flow from operation. And then maybe the last one could be around market share. And that's the 4 metrics. Based on the 4 metrics, if you have, for instance, like I mentioned, their revenue targets, our revenue targets will definitely be in these various phases. You will have it on the annual basis, you have it for half year, you will have it for quarterly, you have it for monthly. Even in some organizations like mine, which is the retail store, we have revenue targets per day. We don't just have it per day, we have revenue target per category. So you have household items, you have grocery items, you have butchery items, you have bakery items, you have health and beauty. These are different business segments that we have in a retail outlet like mine. And each of these segments have their own percentage contribution to the daily revenue targets. The revenue target for a typical Monday to Thursday in a retail outlet, for instance, is different from the revenue target for Friday, Saturday, and Sunday. Friday, it's weekend, we expect more footfall. Saturday, everybody's at home, the parents and the children, we expect higher footfall. Sunday, people are preparing for the next week, so we expect a little drop. So each of the day with their peculiarity, there's now revenue targets for each day. The daily revenue target translates into the weekly revenue target. The weekly revenue target translates into the monthly revenue target. And like that, it goes into the quarterly, the half-yearly, and the annual revenue targets. As HR business partners, you are expected to understand and know what are the revenue targets for your business. Because these targets, you now pick each of the units to say, if our target is to make 100 million sales in a month, so you supply chain, how do you help for achieving 100 million revenue sales in the month? You will agree with me that if supply chain do not procure the items that will be listed on the shelf in the supermarket, then there is nothing the sales unit wants to sell. So it is expected first that the supply chain understands this target. Supply chain calculates how much of items do they need to buy to achieve 100 million sales targets. So these help supply chain to say, I need to buy items worth of 250 million. So my inventory must be 250 million for me to have 100 million revenue sales achievements. Now, if they are going to have 250 million worth of items,
they also need to work with finance. And you also need to work with finance as HR business partner to say, if you are to achieve 100 million revenue targets, supply chain needs 250 million, finance, how do you help achieve a 250 million allocation for inventory replenishment? I'm using the supermarket as a case study. Now, you being able to work with finance, now say finance should be able to plan their cash flow, finance should be able to plan collections, finance should be able to plan vendor payments, finance should be able to work with the vendors to, to negotiate some payment terms so that in the end, the 250 million worth of inventory can be available at the warehouse or at the supermarket shelf, and the sales units, the store manager, the category managers, the sales associates, they can have things to sell in the store. You can see how I've taken the journey through from the revenue targets to different departments, informing what their KPI or what their monthly deliverable would be or what their objectives would be. So finance could say that they must ensure that on everyday sales, there's a collection, there's reconciliation of the amount collected. They are to ensure that there are no financial leakages. They are to ensure that they negotiate with the vendors better payment terms so that out of the 250 million, maybe the physical cash that will be needed will be about 150 million, and the remaining 100 million will be items purchased on credits. So as the HR business partner, if you do not have clear understanding of these metrics of the revenue targets, it becomes difficult to drive this key objective of the business into individual departments. So I've been able to walk us through on revenue targets. Aside revenue, we have what we call gross margin target. These are other business metrics that we find business owners in a contemporary time use, in measuring business performances. The gross margin is a percentage of your gross profit on sales. So for instance, if our sales is 100 Naira and our costs to generate 100 Naira is about 60 Naira, it means that our gross profit will be 100 Naira minus 60 Naira, and that gives us 40 Naira. So your gross margin will be the 40 divided by 100. So you can easily say, oh, your gross margin is 40%. So for every business, there's always a targeted gross margin. For retail stores, blended gross margins, maybe some can be around 22, 23, 25. Some retail stores that have restaurants and some other production arm may tell you they can achieve a 30, 32%. Now, this gross margin is a metrics. It's one of the business metrics, and is expected to be cascaded to every unit to see how everybody plugs in to achieve this business metrics. So you as HR business partner should have clear understanding on how this works. Another business criteria that you have is what we call EBITDA. What's the meaning of EBITDA? EBITDA is earning before interest, tax, depreciation, and amortization. How do we achieve this? This is just your gross profits less operating expenses. Remember, I explained to you how to get your gross profits. Your gross profit is just your sales minus your costs of sales. That gives you your gross profit. Now, your EBITDA, which is earning before interest, tax, depreciation, and amortization, is your gross profit less your operating expenses. What are your operating expenses? They are just your day-to-day expenses, electricity, you have the diesel cost, you have the vehicle maintenance, you have staff salary, you have rent. All of these business operating expenses are what we refer to as, they are just your day-to-day running business expenses. Most of the time, investors and business owners, consider EBITDA as a better way to see how the business is faring. because when you take out your operating expenses from your gross profits, it tells you if that business is breaking even or not. If that business is surviving, it's making some operating profits. So if your gross profit cannot cover your operating expenses, what it means is that you are a loss-making business. The business may not be sustainable in the nearest future. Now, some other investors or some other business owners consider EBITDA as a way to measure what is the free cash flow. That with that, they can know what is the likely cash flow that is from the business that they can use either for expansion or for some other long-term planning. And especially businesses that do not give out credit facilities, that most of their sales are actually cash and carry basis. For such business, they come up with EBITDA as a better way to check out with their cash flow. Well, I think it's just needful to also mention that some finance scholars have also contested EBITDA, but that's not for us today. You are not accountants, and I do not intend to convert you guys to one. The next one that we have is profit before tax. You can have a profit before tax target. Some businesses don't want to look at EBITDA. They rather want to see everything. So they want you to bring in your tax. They want you to bring in your interest. They want you to bring in your interest, bring in your depreciation, your amortization, bring that in and see what's the profit before taxation. So, and this is very simple. It's just same your gross profits, you less your operating expenses, but you will ensure that these your operating expenses include your interest, include your depreciation, that is included in it. And then for the business owners, they consider this that it will help them, it's a better view to see how the business is faring. So for them, this is considered as a better yardstick. So where this is part of the metrics of the business, you need to work with each of the departments to now see how does everyone work towards achieving the targeted profit before tax. Like I mentioned earlier, finance, HR, IT, legal, supply chain, logistics, internal audit. I mentioned that all of these various departments are given supporting role. They are all support functions. Now, if these are all support units, then the support units are majorly cost center. So what HR business partners will be expected to be driving is what are the cost saving initiatives, strategies these various units want to come up with, because when they reduce the cost of the cost of running the business, it means we can achieve better profitability in the end. So it will be expected that HR is working with these various departments to come up with their key objectives or KPI, that are measurable in terms of cost saving activities. So another metric you can have is cash flow from operation, especially for expansion, where most businesses may not have the luxury of investments, new funds being injected by the investors from time to time. So it's expected that the business is self-sustaining and the business can generate enough cash from its activities that will help it expand the scale of operations. So business owners sometimes agree to say, oh, like for my business now, it's a retail outlet. Currently, we have about 4 stores in Lagos, and we are looking forward to have more stores within Lagos, both on the mainland and on the island. And it's expected of us that aside going to the bank to get loans or facilities for expansion, we also expect to contribute from the business. It's called equity contribution. We expect to contribute from the business cash for this expansion. So it could be agreed that on a monthly basis, a 20 million is the target that we are going to pull out from operational funds, and it's strictly for expansion. We should be able to come up with initiatives, objectives that will help each of the departments to come up with to come up with cost-saving metrics that will allow us to have enough cash flow. And this cash flow can be, set aside for the expansion activities that we want to have. You would also agree with me that sometimes when we have some expenses from HR standpoint and we say, oh, we need to pay this, we need to pay that, the finance person comes back to tell us, oh, there's no fund enough to do this or that. The reason is that the cash flow on ground is not enough. And like I had mentioned earlier in the course of our discussion, that profit and cash flow are not the same. Like I'd explained with one of the scenarios I created, I told us that if we sell for 100 Naira, if our total revenue is 100 Naira, and we have our cash sales for 65 Naira, and we have credit sales for 35 Naira, what it means is that what we have generated as cash from that 100 Naira revenue is 65. Now, from our cost of sales, remember, we would have bought some of the inventories ahead of now, but we are going to buy some other one. So our cost of sales, for instance, could be 60 Naira. But out of the 60 Naira, maybe we have bought items, inventory, maybe worth of 35 Naira ahead. So we are just picking it from the warehouse. We are not paying cash on it. But we need to pay additional 25 Naira, that we are going to add, to the items of inventory. This simply means that from cash flow perspective, we have gotten 65 Naira from sales, so that's the cash on us. Now we have taken out 25 Naira from our generated cash to buy items that are needed for the sales. So it means that from a cash flow perspective, the cost of sales could be 60 Naira, but what we have taken out as cash from the sales is 25 Naira. So if you take a 25 Naira from the 65 Naira, it means you have a 40 Naira left. So 40 Naira is the cash you have on you at that time. Let's say our operating expenses is about another 15 Naira. Now, out of this 15 Naira, maybe what we need to pay itself is just 10 Naira. 5 Naira out of it relates to rent that we are paid at the early part of the year, and we are just expensing it on month by month basis. So it means out of the 40 Naira, I've taken out a 10 Naira. So the cash I have with me, which represent my cash flow, is 30 Naira. If there are capital projects I need to do that cannot wait and the money needs to go, I may need to pay for those things, and that could be another 28 Naira. So if I paid for that, remember, that's not part of the profit or loss account for the period. It's not an operating expense, but it is a capital project that must be paid for in that current month. So your clear understanding of what cash flow is and seeing that differently from profitability goes a long way to help manage even the HR-related activities for the business. So business owners expect that HR professionals have clear understanding of what profitability is, and they also have clear understanding of what cash flow is. So when you are talking, you are not talking from an ignorant person's perspective. You are not talking like any other staff within the organization, because you have clear understanding of profitability stance and cash flow view. So another one that we have here is customer conversion, customer retention rate, net promoter score. All of these are metrics the business can have, and then these are used to, in the formation of the various departmental KPIs. The last one I included there is cost center performance targets. Like in one of my former life, we intended that 90% of the budgeted operational costs is what we must spend within the month. And each of the departments, like admin department manages repairs and maintenance. So there's a budget for them. Let's assume the budget is about 50 million. If 90 million is the target, that means they can only spend 45 million. Now, at the end of every month, or even before the end of the month, every 2 weeks, we calculate how much is the total spend and check it with the total allowance available for spend. At the end of the month, it comes to a thing where Sometimes you have spent above the 45 million, sometimes you have spent below the 45 million. But the admin unit can assess their performance in a clear terms based on how much has been expended on repairs and maintenance. These are clear ways you can come up with their KPIs that help them, work relevantly with the organization objectives and gives them clear stance on whether they are performing or they are not performing. I mean, I've been in another place where the budgeted operating expenses for the month maybe was about 150 million. And from the senior management, we have a directives that we must bring down the expenses by 35 million. So we are only allowed to spend 115 million. And we now have to cascade each of the operating expenses line from rent, to look at it from variable costs to fixed costs, to look at controllable, even variable costs, and we had to look at all of that and had to use it with each of the units to come up with what their cost center budget would be. And with that, in clear terms, they can measure what their performances are. So from HR business perspective, HR business partnering perspective, business owners would expect that we have this clear stance. I think I discussed a little about this. I'll just buttress the few points I have here, and then we can move on in our conversation tonight. I wrote it here that oftentimes there is misalignment between the management and the HR BP's view. That's the human resources business partners view to certain business engagements as a result of gaps, and these gaps are either expectation gaps or performance gaps. So, speaking business language, I just want to share with us some of the expectations of senior management, some of the expectations of the board, some of the expectations of business owners, some of the expectations of investors from human resources business partner. With my various years of experience at the senior management or the executive management level, my interaction with the board of various organizations that I've been in, and also the one that I'm also a board member, from various experiences, various expectation gaps that I've seen, I just pulled all of these things together so that I can share with us, and it can be like some feedbacks, that can help us as HR business partners, in managing our senior management, in managing our stakeholders, in delivering our exceptional responsibilities. So the first one that I wrote here, I said, management expects HR business partner to be adequately informed on the business performance. And like I mentioned, we've discussed about various performance metrics or business metrics. So it's expected that you are well informed about all of this and you are running the show with this understanding. And it is expected that HR business partners are driving rewards for staff, with business metrics. You are discussing with metrics. You are discussing with the business performance. Sometimes it gets very irritating when you have HR personnel come to your table and all you can see is just sentiments. All you can see is just unnecessary emotional, display. And you're wondering, you are professional. You should understand better what's happening in the business space. If the factory workers, the shelf attendants, the guys at the production room, if they do not understand, we wouldn't expect our HR professionals not to have this clear understanding. And metrics like cost savings measures that have been put in place, achievements that the employees or the various departments have been able to achieve, what are the additional revenue stream they've been able to introduce into the business, what had been that achievement over the period. These are, you come up with these basic metrics. And when you are making a case, or when you are making a discussion, or when you are making, when you are calling for attention for reward, you are coming up to say, this and these had been done in terms of cost savings, this and these had been done in terms of additional revenue stream for the business. So you are talking very empirical, and that's a more justifying way to have that discussion than coming from sentiment or unnecessary emotional display. The next one is very close to it. Business owners will expect that human resources professionals will always come with data-driven analysis. You're not just coming with your head knowledge. I mean, a lot of time for me, sometimes I feel very, very pissed off when we're having discussion at senior management level, and I have HR representatives being called upon. And when they want to talk about rewards, when they want to talk about incentives, the discussion it's not data driven. There's no basis, there's no analysis, there's nothing, and it's just saying at the beginning of the year, we promised that there was going to be this. Yes, we are promised. So what have we done? What have we achieved? How have we achieved it? What's the level of achievement? So on the basis of the level of achievement, what are you proposing that we do as a business? With an understanding of the cash flow of the business, with an understanding that profitability and cash flow are not the same, what are your proposals? What are you bringing to the table? What do you think we can do for the now? And what do you think we can do later? These are things that we would expect that the HR professionals are bringing to board at the point of discussing with us around rewards and incentives, on the employee. Remember, we are all employees, so you are still representing all of us. But I mean, at that level, we cannot just bring in sentiment. We cannot just run with head knowledge. There must be basis. We can't go to the board and be using head knowledge to discuss. We must have data, empirical basis to defend each of our activities or to make our request, from the board members. Things like, what's the operating cost per employee? What's the revenue that has been generated by employee? What's the operating cost per each segment? What's the revenue per square meter? What's the revenue per each of the business units? These are various metrics that we can bring on board to have very, very productive discussion on rewards, improvements, programs that can be done for employees. Another one that indicated, that it's there, that business owners expect HRBP to make cases for implementation of improvement programs with a clear view of the cash flow. I think I buttressed this a whole lot. So you are not just saying we have made profit of 50 million. You are also interested in how much is our cash flow. Are we engaging on any expansion activities that is taking away all of the cash that we have at the moment? Are we strong in terms of liquidity or in terms of cash flow to implement those things that we have within the plan? And if not, you can have some very strategic discussion on when next or what phases we can have the implementation. And all of this will be done, thereby achieving those goals on HR perspective, as well as achieving milestones and growth that the business had planned for the period. Yes, another one I have here, I said, business partners expect HRBP to consider knowledge, skill sets, expertise of employees as assets, and not just the employees. A lot of time, there's always this sentiment that our employee are your assets. Any company that values its employee, would stay long and this and that. You see, it is not about employing anybody. It is about having those who are knowledgeable. It's about having those who are experts. It's about having those who have right skill sets. Where you do not have people with the right skill sets, where you do not have people with the right knowledge, where you do not have people with the right expertise, it messes up the whole business. So we would expect that as human resources partners, you have a clear understanding that it is not just anybody to do the work, but it is rather to have the knowledgeable one, those who are experts, those who have the right skills, those who have the right attitude, those who have the, the right motivation to occupy those places and deliver what the business wants. Nobody wants liabilities. Business owners, investors do not want liabilities as employees. So we rather want assets. So every time you are having discussion with senior management, around employees, we are expecting you to talk about that in the context of assets. And definition of assets to a typical business owner, definition of assets to senior management is people with the right knowledge, with the right skill sets, with the right expertise, handling the expected responsibilities, because we know they would deliver the targets and possibly surpass the targets. Another thing that is expected is that HR business partner works closely with finance team. I mean, gone are the days where HR is an empire and finance is another empire. Like I said, it's all together a value chain. Each of the chains are together and we must flow and pull each other together. We must run through together. So we expect HR professionals to be the best friend of the finance guys. You should follow through on leave allowances of staff. You should follow through on payment of payee. You should follow through on pension. You should follow through on NSITF and every other regulatory, payments that are expected to be made on behalf of the employees. So you expect to have all of these things being done, and we expect you to work closely with the finance team, not you waiting for the finance team to come meet you. We expect HR business partner to be knowledgeable, even on the payroll schedule. I meet some HR guys, they don't prepare payroll. They don't even know what is all about the payroll. And they'll say, it's finance that prepares it. All HR business partner must have Excel knowledge, at least the intermediate Excel knowledge. You should be able to prepare the payroll template from the beginning to the end. It's not just do the breakdown, and put it on the offer letter. You should be able to prepare the payroll schedule. You'll be able to check for the deductions. You should be able to check for various items on the payroll, payroll schedule. And once you are done, you push it to finance to review. Finance review, internal audit review, and once they are fine, it's being pushed for approval. And once approval is made, payment is made to the various staff. Then the last one I said, business owners expect HR BP to come up with strategies and activities that would help retention and succession planning. It's expected that there will always be succession plans, for the business. And we would expect that the HR business partner is looking at who takes over from the next person. And there's a clear growth metrics for all of the staff. Today, you see staff run to the executive management to say, I'm not sure about my future in this organization. I'm not sure of this, I'm not sure of that. Just because the HR business partners are not engaging enough, they are not showing the clear cut on the organogram, how people would grow, the steps of growth they would achieve. So we would expect that our business partner, who are HR professionals, they are doing enough activities that will help for retention of staff. In organizations where you have young folks, their birthday celebration, monthly celebration means a whole lot to them. Thank God it's Friday. I mean, little costs of items, of refreshment can mean a lot. Team bonding activities, all of these can be a lot of activities that will help for retention. And for business owners, is expectation that we do not need to be thinking about all of that. We expect our business partners to, human resources professional to take over all of these things, bring these initiatives on board. We implement these initiatives and our organization becomes the best place to work. And our staff are excited, they are happy, they want to work with us another 5 years, 10 years. They are not thinking of going anywhere just because of various strategies and initiatives that are coming from the HR business partner. yeah, at this point, I think we've been able to run through some stuffs and I think we can have some interaction.
Thank
Yes,
you so
so
much.
I want to believe from a finance person perspective, I've been able to speak a little the HR language. I am not an HR professional. Well, maybe for now, I do not intend to be one. But I'm a finance person, a close friend to the HR guys. And I think as a person, I celebrate a lot relationship and human assets. So I want to believe I've been able to say in some ways, you know, what is expected from a business perspective and what a finance, what certain finance expectations are for the HR business partner. Please, maybe finally before the interaction session, those times I use we. I am not saying we as HR professional together. I'm just trying to identify with you. So I do not mean I'm an HR person. Thank you.
Thank
Yeah,
you
Mr.
so much. Thank you, thank you, thank you, thank you. This has been an amazing, insightful session. Okay, so I think we have one or two questions already on the chat box, okay, in the Zoom room. Let me quickly look out for that, even though you somehow answered or responded to one of the questions. So somebody is saying here that what if in the organization, HR does not get to see the figures, the data, the numbers? What would be your advice for such a person practicing HR where they don't have access or visibility to financial reports?
Okay, thank you, sir. So I can provide an answer to that quickly, right?
Yes, please.
Okay, so first is this. There are two approaches to work. It's either you want to go the old way of working or you want to go the current business way of working. The old way of working is that if they don't bring it to you, you don't bother yourself. It is only what you are informed about. That's what you get engaged with or what you give your own suggestions to. Now, the current way of working is that it's expected that as soon as you are part of the business, you are you're actively involved in the day-to-day running of the business. So you are expected to go meet the finance person and say, what's our performance? Even while they are deciding on KPIs, as the HR professional, you should have asked, what are the financial metrics for measuring our performance? And once you have asked that, what are the financial metrics for measuring our performance, it becomes impossible and difficult for the business not to tell you those financial metrics. So it means that they need to tell you what the revenue target is. They need to tell you what the gross margin target is, or they need to tell you what the profit before tax target is. They need to tell you what expansion plan target is. So you engaging them from the perspective that even for KPIs, there are financial metrics that must be included in the individual staff, performances or individual department performances or the appraisal of how each of the departments is doing. That forces the organization to discuss, this financial information. So it won't look as if you're necessarily being nosy, but it becomes very clear to them that financial metrics are part of the performances of the organization. And as HR professional, you should have this information handy. So at the end of every month, you are asking the finance people, how much did we make out of our target? Did we hit the target? Did we surpass target? If we surpass target, by what percentage? Because you are going to come back to talk about reward for staff. And if you're going to talk about reward for staff and you do not know by what percentage you have surpassed target or what they've been able to do, then it becomes difficult for you to negotiate terms of reward for your staff. I want to believe with this, to the person who has asked this question, you should be able to achieve, having financial time. So the first one is go engage them. If they do not come engage you, go ask them about the performance financially of the business. Then the second one is at the point of setting up KPIs and appraisals, either at the beginning of the year or the one we are reviewing half yearly or every quarter, ask for financial metrics that are also used in measuring the performance of various departments and various units. And once you have asked for the organization financial metrics, which will be cascaded into various departments, it means you'll definitely be aware and be involved in all of these performances.
Thank you so much. Thank you so much, Mr. Olubi. Again, I can see some of our people from across the country. Thank you, ECM Adiola Adepegba from Kaduna. Thank you so much, Azizat Ibrahim, all the way from University of Ilorin. Thank you so much, Adebola from Lagos, Nigeria. Just trying to say hello to some of the people I can see. If you have a question, this is the point where you can raise up your hand. We'll give you the mic and you can have the floor. Okay? We can take a few questions quickly. Again, I know that was very insightful. That was quite robust. That was quite, you hit the nail on the head and you provided guidance. Thank you for delivering the session with so much simplicity. And I'm sure all of us will approach our career and our job, our profession, our organizations in a different light, making progress. Sometimes some people say, oh, Rose, we have also Rose from Abuja, great to argue with us. Sometimes people will say, oh, I don't like maths. Let me say this, some people, not all, came to HR because they ran from maths, but mathematics is intertwined with finance, okay? And finance is intertwined with HR. There is no welfare program you do, you are going to spend money. You will need to negotiate. Now, for example, there are certain benefits. Let me use an example. Take leave allowance. There are different approaches in different organizations. Some organizations, they will pay everybody's leave allowance once in a year at the same time.
Sure.
Now, some organizations will say they are doing that so that you will have money. But some organizations will pay it once in a year, but on each employee's anniversary. What's the difference between these two scenarios? The second scenario means you can pay it, so to speak, 12 times.
Yeah.
January, February, that may better work with your cash flow. Already, 13th month, you are going to pay it once to all the staff. So sometimes maybe you want to introduce maybe bonus. You may not necessarily want to wait till the end of the year for the bonus. Why? The organization is going to pay 13th month. They are going to buy rice. They are going to buy oil. Then at the same time, pay bonus. So you may say, can we do this bonus every quarter so that the money is not too huge at the same time for the organization? So we need to have this appreciation. As we are also, for example, I know we are just in the third quarter of the year, but anytime from now, many organizations who run January to December will start planning the budget for 2023. As you are planning your key events, you must tie it around the cash flow. Don't put an event when the company will be broke. And you can know, if you can see the financial reports, for example, for the last 2-3 years, if you can see the cash flow for the last 2-3 years, it will give you an idea. You said something using your industry as a case study about how Friday, Saturday, Sunday are peak period. For example, it would be foolish for any HR person in the retail sector to put a TGIF on a Friday. What signal? Maybe the industry you are coming from, we call it TGIF, which means it's a Friday, but a Friday cannot work. Maybe it will even be better on a Monday. So you can't just do copy and paste. There are industry peculiarities that we must appreciate. I like to say this, ladies and gentlemen, for those of us I know a lot of us here now drive cars, but at one point or the other, we all used to enter bus back in the days. When you give a bus conductor money and they don't give you the correct change, you know. If you know, it means you know mathematics. So don't let us feel what are these accounting jargons. No, they are not jargons. Again, I also like to say this as a word of advice, admonishment to one or two people here. Just before you take that request to the MD for approval, take it to your CFO first, or whoever is your account partner. Why? The moment the MD does not approve on the spot and tells you that come back, I'll get back to you, guess what your MD is going to do? He will run it through the CFO. God help you that you had not engaged the CFO before. They will just cut it. But if you are wise, and you should be wise, that's why you're a member of this community. That's why we run all these learning programs so that we can increase our wisdom, our knowledge. You will have gone to meet the CFO first. He will have given you one or two advice that, oh, this is good, but bad timing. This is good, but this budget is too much. And then you can moderate expectation. Also, if you are going to maybe a management meeting, maybe for a retreat, a strategy session, don't just go to the retreat and begin to share insights just like that and programs. Make sure you are thought-based. Just like your HR business partner, the finance is your finance partner. You are his HR partner. Exchange ideas. Let them know the why, the purpose, the intention. Not everything will always work out every time, but at least you'll be working with finance in good faith. Sir, I've been in places where HR colleagues will tell me that my CFO doesn't like me. He's always cutting my budget. Ask question, why are you cutting the budget? You see, when you engage with finance as a department up front, they will be able to tell you that, look, for people programs, we can only afford 20 million naira. Then let them tell them that let me be the one, or let my department determine what programs to cut and what not. Because if you are not careful, they would determine what to cut. They may go and cut the most impactful program. So we must continue to what? Collaborate with finance, collaborate with, of course, not just finance, all the other stakeholders. Sir, you have been of tremendous blessing to us today. I would also like to ask my colleagues on this call, we also do this regularly. Does anyone have either a question, a comment, or a contribution, or an experience, something around today's subject matter? We would also like to hear people speak. Let us learn from your wealth of experience. Okay, I can see Seyi Adegbola. I'm trying to locate you so that I can unmute you. We are open to take a few comments. My colleagues who are co-hosts, if you see Seyi Adegbola, you can also help me to unmute him so that he can speak. Okay, I've enabled you to unmute now. Over to you.
Thank you. Yeah, thank you, Yemi. What you just shared is actually an experience. It's actually an experience I'm currently facing. But fortunately, I had to ask questions in my new role. And I realized that getting approval from MD does not mean you will get the money out. What I started doing when I joined was to first relate with the CFO on the things I want to know if it's available. And if it's not, what if it comes back to your desk? Will it fly? And we agree, we talk, and we permutate and say, okay, for this training, I can't release 2 million. I have just 1 million. Go and work it out. Whatever it is, let me know. And before it gets to MD will just say, hello, guy, can we afford this? Once you say yes, okay, go ahead, fine, approved. Even without memos, a lot of things fly. And at the end of the day, you get yourself through many things. But what I met on ground was totally different. The HR guy will go to MD, get approval. The finance guy will frustrate it, and on and on and on, and basically affect the IR environment. People were not even saying that, are you sure HR is even on top of his game? The next thing you hear is that finance is the one frustrating this thing. And before you know it, there's chaos between finance department and HR department. They don't even want to see each other. They see each other as enemy of the business. But just like what you said, I just told myself, I won't go through that route. Let me just pally this guy and get my stuff done. And it has been a very awesome experience going through that other way. Thank you.
Thank you. Thank you so much, Mr. Adebola, for bringing light and life to with that your real life and current contemporary experience. We are what? Business partner, and we must partner all the strategic business units effectively. Look, HR is nobody's enemy. We are everybody's friend. And anybody, any department can be your friend. What must you do? Understand the language of that unit. Speak it. Engage with them upfront. Avoid lastminute.com. Don't think you can use board approval. I've seen, sir, Mr. Olubi, I've seen where board approved something and money didn't come out. Guess the reason why? There was no money.
That's it.
And guess what? The next time you go to the board, you will find it difficult because the board will assume you have done your due diligence before coming to them. Please,
Exactly.
don't let us be in this situation where we are making our CFO at loggerhead with our MD. No, we should manage grievances by ensuring where possible it doesn't even occur in the first place. You know, there are avoidable grievances and we can what? We can settle it. Sometimes you will delay some things, but you will still get to do it. Sometimes you will do it, but you will scale it down. Okay. Sometimes you will do it, but without money. Maybe you mentioned an example now, training. You may have intended to do an external training, but because of the reality, that doesn't mean you will cancel the training. Yeah. You may now get somebody inside, do it internal training, you organize buns, donuts, jam, do cookies, you know, do it internally. Please, HR, please, as we progress, don't say you are not going to do things because of money. Money is a type of capital. There is a relational capital. I know people on this call that we have done free trainings for each other to help our organizations. Seyi Adegbola cannot call me now and I will tell him because he doesn't have money, I'm not going to call. You may say that's relational capital. So we are building it. Okay, walk around. What's our plan A? You want to use maybe Harvard Business School. Plan B, maybe a Nigerian setting. Plan C, plan D. You must get things done. Okay, HR has gotten to that level where we see money and finance as a resource, but we leverage on other types of resources, key, which include what? Relational capital. Again, who would like to share? Who would like to say one or two things? Do you have any questions or comments? I'd like to hear a lady talk today, if possible. Anyone? Okay, I can see Favor Ojo. I'm excited. I've given you permission to speak, Favor. Please try and speak. Thank you so much.
Yes, sir. Thank you, sir. Can you hear me, sir?
Loud and clear. Please proceed with your comments or contributions.
Okay, sir. So this is very funny though. My previous employment where I just left last month. So we had this plan to restructure and everything, like they said, which wasn't followed though. So now the issue was this. I was compiling a lot of resources, trying to create a pattern of operation. That is so that you will know how much is going to operational cost. You know, make sure that everything is balanced and how much you are getting as revenue, like he was saying. So that has always been a problem because sometimes you won't even know how much you are spending. When I came in, so I said, okay, I called the accountant, who happens to be the mother of the CEO. So asking her the things that she by herself does procure for some departments. So as if I was trying to ask for business secrets. I felt, man, it's something I should know. I mean, we can't just be running the business blindly. It's not a good omen. before you know it, we'll start having people who will be stealing from the business without we knowing, just because we're not taking proper record and having everything by the book. So I tried to, go around, ask questions, even from people that normally I shouldn't be interfacing with. I had to go to the supervisors, to even employees entry level, asking them, okay, when you buy this thing, how much do you get? Because she wasn't talking to me. And I talked to the CEO as well, as if it was a joint plan. Like, why is everybody acting like witches and wizards? Just try and give me information I need. But at the end of the day, I almost couldn't get all I needed, but I got up to 90%. So now, this situation, going forward, if I made the same scenario in another organization, what do you think I can do to really go past this obstacle?
Thank you so much, Favor, for your question. Mr. Olubi, you would like to respond?
Okay, all right, Favor, thanks. Sorry that you had to go through this challenge. I would want to say first, please, as HR business partner, understand the fact that not all finance persons had moved away from the accounting lifestyle. So many CFOs, so many finance managers are still accountants. And you know what accountants do is they are just bookkeepers. It's what they tell them, that's what they do. They just prepare the books, they share the numbers. They can't even say the story behind the numbers, and so many times when you are too curious and you are drilling down, they see you as a potential threat, and they want to defend themselves by sealing you up with some information because they just feel like, it's the accountant's job, so what concerns you? So sometimes engagement, continuous engagement, not relenting in engagement is what saves it. Continuous engagement will allow you give them some other business perspective to say, yes, you are the professional, you've been fantastic. However, in this age and time, in managing KPIs, even from HR perspective, these are the things we're expected to do. These are the ways we're expected to collaborate with other units so that we can achieve the organization's objective. You begin to tutor them, and so gradually there will be mindset shifts, and the so-called accountants will begin to become finance people, and that will help them grow into the direction, you are pushing at. So I want to first apologize on our behalf, then encourage you on the other hand, that don't get tired, still push harder. I'm sure the harder you push, the closer you will get. I should also say this, just to prepare our minds. Sometimes the CEOs and the MD, if they are in the the Baba Timbelai, the ancient of days generation, all of these secrets are things they think is what should be concealed from staff. Nobody should know. But in the modern business practice, there are basic information your staff should know, because that's how they can run with you in the journey. When they don't know, they are not running with you. And you'll be complaining nobody is taking ownership. Nobody will take ownership when they don't know anything about ownership. So these are conversations we are going to have, and we keep having, just keep letting them see the light from people taking ownership, people contributing their quota to the organization, achieving the bigger picture. The more you keep conversing from the bigger picture perspective, the better you will be in winning some of them over to our side. And let's just hope in a short while we get all of these things being done. However, the level of information you have, still play around it and see how much of success you can achieve, so that you won't be discouraged and you are doing nothing, and in a short while you start feeling, unfulfilled on the role, and you are looking out for the next option. I think those are my suggestions.
Thank you so much, Toby Olubi. I think the way you have rounded up this particular response is a great way to round up and wrap up this session. Please, I'd like you to show your appreciation and gratitude to Toby Olubi by, sending some messages in the chat box. All right? In one word, one phrase, or one sentence, what your experience has been today. I'd like to thank you very sincerely, Mr. Toby Olubi, for you to, come out this evening, family time, work time. This is the peak period of Toby Olubi's business. Now you understand. So he's with us like some of, it's like you are with us on a Monday morning. That is what this time is for Toby Olubi. He gave us his peak period. Tomorrow, 7 p.m., we will be having another session. This HR mentorship learning series. The title is JAPA for HR professionals. The way, the how, prospect and challenges. So if you are planning to plan to JAPA, you need to listen. And if you are already there, you also need to listen. These two people are, the ladies and HR professional, the guy too has great experience and exposure to HR people. Just last week, he became a transformational coach with HP Canada. So they are going to be sharing experiences. Ayo Alabai also is the founder of Bedview Travels here. So those IELTS, whatever you call it, he knows the in and out. He'll be sharing insight. So tomorrow's session is not strictly for HR professionals. Maybe your cousins, friends, family also want to JAPA. Let them know. At HR Mentorship, we care for all-round success. So today we spoke about you understanding finance. Tomorrow we are telling you how to JAPA. That's how nice we are on this platform. I would like to conclude in the words of Toby Olubi that if you want people to follow you, if you want people to be understanding, if you want people to bear the burden of the organization, if you want people to show the same sense of urgency, if you want them to show ownership, you have to give them information, timely information. HR, which information are you giving your employees? Do they know the state of the situation? Are your employees aware that the Queen has died? Or they still think the Queen is still there? Let your employees know that there is a Prince Charles. What is the Prince Charles in your business environment? Let them know. Ladies and gentlemen, this has been yet another wonderful session. Thank you for joining us. We do not take it for granted. All right, ladies and gentlemen, subscribe to our YouTube channel. We will upload this on the YouTube channel in the next 1 hour or as fast as Zoom can conclude the conversion. If you are not a member of the HR Mentorship Group and you would like to be, please fill the registration link. I will share it again on the Zoom chat. We would love you to join us. Again, Mr. Toby, any closing or parting?
Thank you so much. Pleasure. Bye.
Bye.